Hello and welcome to this CNBC Africa special broadcast on sustainable development and sustainable debt. Dakar was the host city for the international conference as the International Monetary Fund and the government of Senegal, in partnership with the United Nations and the Circle of Economists, put the spotlight on finding the right balance on sustainable development and debt sustainability. The engagement brought together 6 African presidents and international development partners to share their views on the challenges in funding development on the continent. IMF's new managing director, Kristalina Georgieva, says Africa is halfway to achieving the Sustainable Development Goals and needs to accelerate the speed of development to get there. I caught up with her on the sidelines of the international conference to get more insight on this topic.
What we know is that Africa is on the move, and GDP growth in a number of countries has been higher than average in the world, but we also have parts of Africa falling behind. To speed up development, Africa needs to do 3 things. 1, rely on itself, increase revenues that the budget can collect and then place into development. We assess that the potential is somewhere between 3 and 5% of GDP. Boosting domestic revenues is hugely advantageous for Africa. Secondly, it has to improve quality of spending. Today, on every dollar that is invested, the benefit in terms of assets is only 60 cents. So efficiency of spending, especially when it comes down to long-term development programs, is a reservoir for Africa to be tapped in. And 3, we do need to see more aggressive pursuit of private investment in Africa. And for that, 2 things always work very well: to have high-quality infrastructure, high-quality labor force on one side, and on the other side, to have good governance, to have investment climate that everybody can trust.
But it's important to understand how diverse Africa is as a continent, because if you're going to get the right financing options that's a best fit for each African country, you need to understand, how they're different from each other. Some are commodity exporters,
Yes.
Some are going quite well, like you earlier mentioned, and some are not doing so well, they're lagging behind. And some countries are as well fragile states. But how do we find this best fit?
Well, the most important thing, as you said, is to understand conditions in each and every country and not put one label all of them. And this is where an institution like the International Monetary Fund is very helpful, because that's what we do. We dig deeper into specificities of countries. We have seen some 20 African countries being laggards vis-a-vis the rest of the world, mostly because of fragility, mostly because of conflict. And since we are on this team, Burkina Faso suffered yet again a terrorist attack in a church. My empathy to people. We have to work very hard to improve security everywhere, but especially when countries are most vulnerable. And then we have some 25 countries that are outperforming the rest of the world. Most of them are not commodity exporters. Very simple message: diversify. When you diversify your economy, you're more likely to withstand shocks that may be coming from outside.
Yeah, but in trying to build those resilient economies, trying to diversify, there's still that dilemma of, trying to finance the development that you need and also, addressing the vulnerabilities that debt exposes you to. So how can we get find that right balance?
What is very important to recognize is that we have seen diversification of debt strategies in countries, sometimes for the better, sometimes not. Today, on average, the debt burden in Africa is 55% of GDP. So you have 1.7 trillion GDP, 55% is a debt. 2/3 of this debt is now commercial, not concessional. So thinking of how to generate resources through borrowing in a sustainable manner means one simple thing, and this is what we support: good, transparent debt management. When everything is on the table, we know what the borrowing has been so far, we can have a good strategy for the future. When some of it is above and some of it is below board, then we have a problem.
And that was Kristalina Georgieva, the Managing Director of the IMF. We'll take a quick break, and when we return, we'll share some more highlights from the conference. Welcome back to this special CNBC Africa broadcast on sustainable development and sustainable debt. So we ask, how can governments in sub-Saharan Africa boost their capacity for debt management and expenditure efficiency while striking the right balance between supporting development and safeguarding debt sustainability? These and more were explored at the international conference. Take a look. The city of Dakar played host to the International Conference on Sustainable Development and Sustainable Debt, an event jointly organized by the Government of Senegal and the International Monetary Fund in partnership with the United Nations and with the support of the Circle of Economists. The aim to explore ways to find the right balance between financing development in Africa while safeguarding debt sustainability.
This is an opportunity to exchange in depth and to seriously talk about an issue that has always been and will remain important in terms of economic policies.
Well, Africa is halfway to achieving the Sustainable Development Goals. Clearly, it has to accelerate speed of development to get there. And to do so, borrowing is important to generate investments in infrastructure, in people, but that has to be sustainable.
It's been quite amazing, first of all, that heads of state and government are having this conversation with the IMF, with other development partners in the room on the challenges and the complexities of it, and really what perhaps in some cases maybe some heads of state will say a double standard. My major takeaway is that, you know, people understanding that Africa is not a country, it's 54, that context matters, the quality of the debt, what it's used for, whether it's sustainable or not in terms of the terms and conditions that you take on. And, you know, looking past the risk, which often are perceptions, they have currency, and how do you deal with that? So I think a number of issues that were brought up that I think for the first time are voiced, but with a view to finding a solution.
On this kind of issue. And it is also important to understand that these issues do not lend themselves to certainties, to recipes about what needs to be done. These are issues that actually are based on a series of tensions. You need to be financed, you need to find funds, but that may create debt. How is that debt sustainable? These are things that should be constantly in the mind of decision makers, and this is also one of the objectives of this conference to make that clear. And my point is that sustainability is not about a ratio of debt, it's not about an amount of debt, it's about the quality of investments that are financed through debt.
But also to finance the development is not only about having debt, it is about also attracting private sector investment. Private sector investment through PPPs to make sure that the private sector is taking risk, but also is getting the right reward, but at the same time that we are having the impact on our populations.
So that's a good thing. How you get it, how you use it, all very important, and the scale and the terms which you have.
The one-day event marked the very first visit of the new IMF Managing Director, Kristalina Georgieva, to Sub-Saharan Africa. I had a quick chat with her, and she shared her views on what Africa needs to do to fast-track development on the continent.
What we know is that Africa is on the move, and GDP growth in a number of countries has been higher than average in the world, but we also have parts of Africa falling behind. To speed up development, Africa needs to do three things. One, rely on itself, increase revenues that the budget can collect and then place into development. We assess that the potential is somewhere between 3 and 5% of GDP. Boosting domestic revenues is hugely advantageous for Africa. Secondly, it has to improve quality of spending. Today, on every dollar that is invested, the benefit in terms of assets is only 60 cents. So efficiency of spending, especially when it comes down to long-term development programs, is a reservoir for Africa to be tapped in. And three, we do need to see more aggressive pursuit of private investment in Africa. And for that, two things always work very well: to have high quality infrastructure, high quality labor force on one side, and on the other side to have good governance, to have investment climate that everybody can trust.
With over 800 participants from more than 100 countries in attendance, the international conference hosted 49 speakers in 6 roundtables covering areas from enhancing joint efforts by development partners to ways to better capture returns from public investment. The high point of the day was the high-level exchange session with the IMF Managing Director, the Deputy Secretary General of the United Nations, and 6 presidents from countries in the West African Economic and Monetary Union.
I'd like to say that debt is needed, I think. We African countries should not be afraid of getting into debt. However, we need to get into reasonable debt. Is it, be it sound debt in terms of projects or concessional debt, but also that is reimbursable from our equity instead of getting indebted in order to reimburse previous debts. In Niger, we have been realizing 6% growth in average over the last 7 years. But with this, you can imagine the transformations underway in the country. While our only internal equity will not suffice, we need that. It's true that during the last decade we have increased our debts, and in particular the volume of internal debt, because we needed to face some shocks. In particular, in the case of Niger, we face 3 shocks: security shock, climate shock, and the shock of reduced price of raw materials. Therefore, we needed to get into debt. So internal debt helped us to cover these shocks. Therefore, we need to continue getting into debt. It's obvious, but debt has to be sustainable. However, we should not stop investment, and to invest you have to get into debt. Of course, you need internal equity, but also you need that there is a balance to be stricken thereon, and investments have to appreciate. Debt has to be sustainable. We need to ensure macroeconomic balances.
I think this exercise, as you said, is interesting because for once we are talking to each other among Africans. But this dialogue wouldn't be useful if we didn't discuss the reality. But we're in Africa, and this is the continent which has the greatest challenges. And I don't think that we can be included in global goals. At a point in time, we have to comply. It is true, but the issue of defense and security, I don't think we can find the right solution today as we sit here. But I would like to say that I hope that this discussion will continue seriously, because we talked about emergency. We're living in a state of emergency every day. All the kidnappings and the killings, and we cannot wait. And this can destabilize your macroeconomic situation. Sometimes you get the impression that there's a big gap between what we are saying and what we are doing. We can be satisfied because we achieve the convergence criteria, but that doesn't mean that our populations are happy. Okay, the issue of climate change also, these are pledges. We shouldn't be expected to just make efforts in very difficult context. And when it's a matter of climate, we organize conferences and we forget it. And then we are sanctioned individually. And then saying some countries, you haven't done this, you haven't done that. And we talk about shocks. This is indeed a shock. And in the past, when we had shocks, we had appropriate mechanisms to address them. But security and our safety is not a shock that we caused ourselves. People had the good idea, bad idea, etc., to do what they did in Libya. And now we are paying the price. So we are accountable to our populations, and people are looking at this. They're saying, do something for us. And we know, unfortunately, from experience that this is an evil which, unfortunately, will haunt us for a long time. The presidents are facing all these examples. They have the examples of Iraq and Afghanistan, etc. That is what we need to address together, as President Macky Sall has said. If you continue prescribing the same remedies, we will never find a solution, or there will be only partial solutions. Let us avoid the frustration of going from plan to plan before we discuss the essence. We have a program, yes, it's true, but finally, well, we're not the only countries in the world. We have, at a point in time, we have to pause and ask whether there's a meaning in all this. Whether, and sometimes we will not have all the answers, but we must be bold enough to put the question on the table and treat them honestly. The purpose of this meeting is very important, because very, very important. I would like to thank President Macky Sall for underscoring this, because this enables us in such a framework with the African experts present and international partners and experts present to find new guidance and new avenues to find the sources of financing. We can have a public deficit over 3% and have sustainable debt. It's possible. President Macky Sall talked about equity investment for gas and oil industry. And he said, but we need a lot of money to be part of the capital and not just be content with royalties. But if you don't have cash, how can you invest? You have to borrow. You have to borrow for 30, 20 yield and pay so much. And you have to service your debt in a sustainable manner. And even if it's sustainable, you cannot obtain that loan because your convergence criteria will no longer be achieved. And the IMF, I believe, should refuse considering the quality of debt, of investment that the debt will finance, because I think we can do an investment that is so profitable that it can generate income for the future. But when you talk about such a debt that will create an imbalance in your convergence criteria. Well, no, I'm not going to look at whether it's 10 over 14 years later that you're going to be able to pay. If you go to the World Bank, you say my role is not to appreciate the debt sustainability. That's not part of my role. That's what they will tell you. And then, it is an impasse. He who has the power of appreciating debt sustainability will tell you this kind of quality computation is not my role. Okay? It's not my role to analyze that debt from that point of view. So we are being prevented, even where the opportunity of financing a viable resource-creating project is there, we cannot do it. Yeah, we are prevented from doing it. And we know that we can honor our commitments, and this debt can produce wealth for development. So these are issues that today require from all of us, especially institutions, to overhaul our way of thinking on our models for analysis of debt viability and sustainability and convergence criteria. I think I would like to urge, and I hope you will help me urge OECD and all the other institutions to change the way that they conduct their analysis of these criteria so that we can go to the private market to develop ourselves. Thank you.
Very simple, straightforward points to make. The first one is to recognize President Macky Sall for turning the morning session from us speaking to you into us talking with each other, opened up the discussion in a very productive manner. And I heard from many in the audience that you found this frank engagement to be very refreshing and also to feed into the sessions that followed afterwards. We listened very carefully, and what we heard is that there is a lot we agree on. We agree on the importance of boosting investments in infrastructure, human capital for growth, jobs, and improving in the lives of people, and to do that in a sustainable manner. We also agree that we have to work much harder to differentiate investment destinations in Africa. That putting the whole of Africa in one category of high risk is a disservice to Africa, a disservice to investors all over the world. We will work on that. We also agree that while we are optimistic about the future of Africa, there are very high pressures and risks. Climate change, security threats, the uncertainty in the world economy that of course has spillover on Africa. I want to finish on a personal note. I have traveled all over Africa. almost everywhere, but not in Senegal, my very first trip to Senegal. And I'm grateful to fate for making this trip, being one with such an impressive group of African leaders and with all of you. Thank you.
One of the takeaways from this one-day engagement was a joint statement that has been dubbed the Dakar Consensus, where Senegal's President Macky Sall closed the conference by detailing 7 areas of common ground. The areas cut across better harnessing domestic resources, taking environmental and security challenges into account, tackling the exaggerated perception of risk in Africa, among others.
I wish to rely on my colleagues, heads of states, but also on you, dear Kristalina. Please support and amplify this Dakar message we can consider as the Dakar Consensus with our partners, our bilateral but also multilateral partners, including European Union, which is represented in this meeting. We all follow our partners here, but also with private sector. On the note of hope, I declare closed the deliberations of the Conference on Sustainable Development and Sustainable Debt, finding the right balance. Thank you so much.
It's been a great day here where frank conversations have been had on the future of development here on the continent. The focus has been sustainable development and debt sustainability. We hope the conversations here will go a long way for African governments to make the right decisions when trying to finance their development needs. From me, it's Kenneth Igbomo, and bye for now.